Hello, investors. This is Ted Zhang, Associate Portfolio Manager with Revere Asset Management. Today is Tuesday, December 31st, 4:52 p.m., coming to you from Fort Lauderdale with tonight's Revere Roundup Daily Market Insight video. Today is a special day. It is the last day of 2024. It is also the last trading day of 2024. I hope you guys had a great 2024 and definitely looking at 2025. Of course, wishing everyone the best health, wealth, and happiness, as well as joy. So, jumping into this video, market state, we've changed it to a short-term pullback following today's action. Nothing completely destroyed, obviously. We'll get into that action, but just enough indicators to tell us and um, indicators and pointers for us to label this market a short-term pullback at this point. Market leaders, we still have that neutral with a red sub arrow. We'll definitely go over the 21 over 21 list. Many names down 3 or 4 days in a row. Short term, S&P, Qs, mid caps, small caps, Dow, all below their respective 21 exponential moving averages. So we're back to the red arrow. Medium term, Q is still above the 50-day. S&P, Dow, mid caps, and small caps, all below the 50-day, which is why we have that red sub arrow. And all indexes are still above the 200-day moving average. So we still have that green arrow for the long-term trend. And as long as we're above the 200-day moving average, we're not worried about a bear market. As we know, all bear markets happen under the 200-day moving average. So what happened today? Santa Claus rally is likely not coming to town this year, and we'll talk about that. 21 over 21 list, leaders list, down 2%. One neutral, 20 down. Big 8, down 1.37%. RG8 down 0.61%. Global 60/40 down 0.19%. And GROTECTION down 0.42%. Jumping right into the chart of the S&P 500. Let's take a step back at this entire year so far. Heading into this year, we were pretty much headed into a pullback at the end of last year, 2023, and into this year. And shortly after, we found support to 21 EMA. And we pretty much just were in a power trend until late March. In terms of macroeconomics and the Fed forecast, heading into this year, at some point, we're expecting 7 rate cuts. We thought inflation was decelerating quickly. But in that first half, we started seeing some sticky inflationary numbers, and the expectations for those rate cuts pulled back for sure, especially in the summer. The combination of potential recession and the yen carry trade unwinding, with the Bank of Japan talking about raising rates, led to a mini crash that ended with 3 days down, and that bottomed on August 5th, which led to this recent bottom and subsequent uptrend that we saw. Of course, we built this huge multi-month base, broke out, pulled back to the 50-day right before the election, showing some uncertainty with the election. And of course, that hits all the headlines this year. Donald Trump takes back the White House, and from that, we gapped up the day after above this 58.78 level into all-time highs, pulled back, found support the 21 EMA, rallied above 6,000, and then this kill candle right here was from FOMC, where the Fed cut 25 basis points following a 25 basis point rate cut in November and a 50 basis point rate cut in September. That led to a triple break of the 8, 21, and 50. We lived down there for 2 days and then saw this huge reversal candle and some more volatility where we reclaimed the key moving averages. And recently, in the last 4 days, we fell back below key moving averages, and now we're living below the 50, 21, and 8 EMA. What continues to be a key level is that pre-election breakout resistance area, about that level right there. And you could say, and right there. So that key, this box right now is really key and is what we're watching. We're also watching this cluster of lows right here around 58.50, as well as this low 12.20 formed after this recent FOMC pullback of 58.32. That said, Let's go to RSP, which has been lagging, but today it's showing some RS. But overall, the bigger picture, it's been severely lagging. Living below the 8 and 21 and 50-day exponential, 50-day moving averages for a few weeks now. All those moving averages have turned down. The 200-day is starting to flatten too. So this is starting to be a little ominous. We definitely don't want to see more indexes break below the 200-day, or else that could be a bear market warning. The Qs, weak close today, below the 8 and 21, still close above the 50, but minusculely, marginally. This is right here testing that 509.29 level of 1220. And I would find that be a pretty big support level. Another one is this pre-election breakout level of 500, as well as that left side peak. So we'll have to see if this just becomes a breakout retest of 500, or if there's something more ominous about this market going forward. The eagle weighted, weaker, right above the 200-day moving average, below the 821 and 50. The Dow, FOMC killed the Dow. It rallied back into the 821 and 50 and failed so far. Mid caps, same thing, living below 821 and 50, lagging relative strength line. With higher interest rates, higher dollar, that definitely put a damper on small caps, mid caps, which are definitely more interest rate sensitive. Russell, same thing, small caps, living below 821 and 50, still holding the 2200 level though. VIX, starting to see the VIX trickle up higher here after the spike on FOMC, then a huge sell off in the VIX, and now we're starting to trickle a little bit higher, above 15, currently at 17.35. The dollar breaks out this bull flag today after it breaks out this other bull flag. It's really surfing the moving average perfectly like a momentum stock. Big move up, pull back, held the 21, big move up, pull back, undercut, reclaim right here. You can see UNR right here. Those higher lows against the key moving averages, then breaks out this flag, surfs the EMA, and breaks out this flag again. Next, gold continues just the base. Really nothing to really talk about here. As long as we hold 236, it is fine, and break over 257, and that is a buy opportunity. Silver, a lot weaker than gold, below the 200-day and the 821 and 50. Silver's not looking great at all. You got a failed breakout, which often can lead to downside fast moves, which is what we've seen. Silver's in a bear market, pretty much in a stage 4 decline. It is in a stage 4 decline right now. Gold miners, weak as they come as well, below the 821, 50, and 200-day. Bitcoin found support yesterday, tried pushing above today, rejected the 821 exponential moving averages. This 50 level and 50-day in IBIT continued to be a key level. We did undercut reclaim the 10-week, and oftentimes that could be a buy opportunity, especially out of a huge base breakout on massive volume. The first test of the 10-week is often a buy or add opportunity. The broad bonds continue to be weak as rates are rising. That's due to macroeconomic factors and Fed policy going forward. Looking at less than about 2 rate cuts next year because of higher than expected growth expectations and inflation. Going on, TLT continues to trend below the 821.50 and 200-day. Of course, that means rates are rising. That's the 10. Where that was the 30-year first, and this is the 10-year right here. So that's it for the inter-asset correlation. Let's go to the tail of the tape. Markets today, of course, short-term pullback. We're currently operating in the bear case, sustained break below 21 EMA. This happened 12/27. News, Santa Claus rally now minus 1.55% with 2 sessions remaining. Talk about the January trifecta coming into this year, and we hit that, and we end up having a great year. If we don't get the Santa Claus positive rally, we don't get the January trifecta. And we'll definitely talk about that in January. Today's keys, we're watching S&P versus 21 EMA, which would close below, 50-day, which would close below. But we did hold the 58.50 support level. Qs, watching against the 21 EMA, which we closed below, and the 50-day moving average, which we closed marginally above. Day count, 2 days down to 3 days down, 3 days below the 8 EMA, 3 days below the 21 EMA. Our expectations are neutral/negative, but shifting more towards negative, since we are living below the 21 EMA now. Action, we gapped up early this morning, and then we had a choppy trend down day. Sectors, long rates, long end of the curve was up, dollar is up, energy, real estate, builders, and staples, those are up as well. And that's why you saw RSP actually green today while the S&P is red. Oil is up, gold and silver are up, bond prices down, tech, discretionary, and communications. So more of the growthier sectors were down. Art K, mega caps, Bitcoin, quantum, and semis. Today, all we did was sell our hedge in Qubit around the 50-day, where we do expect the bounce. 1.22 beta, minus 2.87% open heat. Bottom line is Santa Claus rally is likely not coming to town this year. Thursday's keys. So the new year, the first trading day of the new year, our keys are watching the S&P versus 50-day and 5850 support level, and Qs versus 21 EMA and 50-day. And just really looking forward to the year. It seems like the market tone of the last couple of weeks have been dictated by Fed policy after the FOMC. That really put a damper on momentum. So we'll definitely have to see how data comes in, how the Fed reacts to that, and how, of course, the most important thing, the markets and institutions react to it. So now let's go to the 21 over 21 list. Give me 1 second. Get that aside. We'll go to the 21 over 21 list. Every single name was down today. Expedia pretty much held really tight day above the 8 and 21. But we'll start from the down names. INOQ, this one has a large ATR, so even down 5.7% is completely normal. The ATR of INOQ over the last 20 days is about 15%. So this is about a third of the ATR. So normal action, even though it's down, still surfing the 21 EMA. RBRK, surfing the 21 EMA as well. Just needs to consolidate this post-gap action. Oftentimes when you accelerate, when you have a move that has this slope and then it accelerates, whether it's on news or just on a natural gap, you do often need more consolidation sideways. However, if you had this gap coming out of this base, I would expect us, for example, if you had this gap bar coming out of this base, I would expect that the move to have higher velocity instead of more consolidation. APP continues to leak off down 3.44% below the 821. But as long as this low holds and 300 holds, this is completely fine. It's just digesting this just enormous move that it's made this year and accelerated on earnings. Above 350, you could potentially try it, but it's definitely a little bit short right now. Fundamentals are extraordinary, triple digits in the last 4 quarters, pretty much above 40%. Sales growth every single quarter, and gross margins just amazing, over 70%. That's what you get with these software names. They have high gross margins, high operational efficiency, and that's why they can make so much profits and why there's a lot of leverage in software. CRDO, also a name that was trending up like this, and then it had accelerated move. Consolidation is completely normal here. Tesla, a little more ominous now, bearish engulfing. Didn't even get up to the 8 EMA, closed below 21 EMA. Did close below 400, but it looks like this 360 level might come again and might meet the 10-week and the 50-day right there. We're back below those previous all-time highs of 415 as well. RKLB, normal action. We had a failed breakout though, then we had a shakeout. Now just consolidation day, all on lower than average volume. So still really nice, above 28.1. That's a high type flag. This is in the space theme, and why it's doing so well is SpaceX has raised that 350 billion valuation. This company is competing against SpaceX for some launches, some satellite deployments, and has a valuation by the market, or it has a market cap of only about 13 billion. Even if they could take a minuscule portion of SpaceX market share, this is why the market is betting on it going higher. And it does have sales too, and it's decent sales. ALAB, another extraordinarily strong name, just continues to trend above the 8 and 21 exponential moving averages. Another leader right there. Same with Palantir, typical canceling name, just like ALAB. Great earnings and sales, gross margins as well. Now, first test, but still held the 21 EMA. There's a trend line right here. like I drew, we did break below that. So we do need to hold this 21 EMA. Um, we'll see what happens going forward. CLS, still great post-earnings gap action. As you can see, the rate of change of the stock, you can see the slope was like this, then became like this, then became like this, and now it's like this. So it's starting to round out a bit. The second derivative, or the rate of change of the stock, is decelerating. And oftentimes that can lead to a rolling over stock and more consolidation in the name. Abgo, still constructive consolidation after this earnings gap. Some VCP action if you can look on the 60-minute volatility contraction. You can see first leg, second leg, volume has been decelerating. So that looks decent. Let me find those names. This is not cooperating with me. SoFi, just building a sideways consolidation after a 100% plus move. It's starting to exit high tight flag territory because the consolidation is typically 3 to 5 weeks. So we're just about there right now. 1, 2, 3, 4. We're working on the fifth week. So it really has to go soon to still qualify the high tech flag. Last quarter, 350% year over year earnings, 117% before, decent revenues as well. AR, natural natural gas name, broke out of cup with handle with natural gas strong. I think if we look at UNG, we saw that break out of this base, but so far it's gapped down. Deckers, they're the holding company that owns Hoka's and I believe Uggs. This continues to trend nicely after this cup with handle breakout. First test of the 21 EMA, 200 level is right here as well. Red, another true market leader, testing the 21 EMA like a lab. Seems like these charts are so similar. Could be the same institutions accumulating them, these new IPOs. 420% year over year earnings is extraordinary. First quarter profitable, 67% growth in sales, 90% gross margins is amazing. Look at the pre-tax margins, 8.6. That's after you subtract all the various costs. So gross margins are so strong here as well. And honestly, I will end it right there. We pretty much went over the 21 over 21 list. Let's go back to this page right here. So yeah, that is it. This is the last video of 2024. We'll see you next year in a couple days for the first video of 2025. Don will be doing an annual annual portfolio review of 2024 and putting that out to clients only. So if you do want to see those videos, definitely reach out if you're interested in becoming a client. And you can do that at ted@revereasset.com. My Twitter is Ted H. Zhang. Phone is 855 Real Wealth. That's 855-732-5932. Our website is revereasset.com and our YouTube is Revere Asset. We initially created the GROTECTION portfolio designed with a dual mandate to grow assets in uptrends and protect assets in downtrends. And we are fulfilling that as we pull back. We decreased exposure, lowered our sizing, and we're going to continue surfing the various waves of the market. And just a reminder, Connor and I will be co-managing our new portfolio based off GROTECTION named TurboTection. It'll be more aggressive, higher position sizing, a little bit less liquidity requirements, and is designed to capture even more upside. Definitely more aggressive, and you do have to be accredited or sophisticated. If you're interested in that, you can reach out to me at ted@revereasset.com, Connor at revereasset.com, or you can contact Dan at revereasset.com as well. This is open to existing clients and new clients as well who are a fit for the portfolio. And with that said, this is the end of 2024, and Happy New Year to all of you who tuned into this video. We've seen so much growth at Revere. Our YouTube channel is almost over 2,500 subscribers. Our Twitter accounts have exploded, and just continue helping us get the name of Revere out into the world. Like and subscribe, comment if you please. And yeah, best wishes in 2025. Let's make it the best one yet. As always, the best is always yet to come.